here's the truth. The wealthy don't just invest better, they play by a totally different rule book. While most W-2 earners hustle to max out a 401k, high net worth investors are legally getting rid of their taxes, and it's all part of the plan to rebuild America. It doesn't matter if you align with the left or the right. This isn't shady. It's an actual strategy. These are the types of conversations I have with my CPA, and I encourage everyone, regardless of their wealth status, to have a similar conversation with their CPA. I'm not a CPA, and this is not tax advice, but I'm happy to share my conversations with my CPA with you and hopefully guide you down a path to have similar conversations and ask better questions with your CPA. The new tax bill is about to open the door to generational wealth, and if you understand how to position yourself, you won't just survive, but you're going to thrive. I'm Christopher Smith, the founder of the Standard Private Equity Group, and we give professionals, high W-2 earners, and financial advisors direct access to institutional grade investments, the same type of investments that ultra wealthy use to legally slash taxes and grow wealth fast. So right now, there's 6 key tax changes that are converging, and they create a rare, powerful window for income equity growth and serious tax relief. The more conventional advice is to work hard, max out your 401k, write out the stock market, trust the mutual funds, and let somebody else manage it. But guess what? That system wasn't built for freedom and to be able to buy back your time. And quite honestly, how has that been going for you recently? How does the emotional investors and the emotionalness of the stock market affect your portfolio? All the while, savvy investors are using private equity deals to reduce taxable income, build equity, and earn real cash flow, all while getting the benefits of the tax code. Here's a couple highlights of the new tax bill. 100% bonus depreciation. You don't have to wait 27 years to realize value. With 100% bonus depreciation and cost segregation, you can deduct up to 35% of your investment in year 1. For example, on a $200,000 deal, that's $60,000 in paper losses, which translates into about a $20,000 in actual tax savings, depending on your tax situation. And keep in mind, I'm not a CPA, so be sure to check with your CPA. Section 179 of the tax code expansion, this deduction is now at $1.29 million, meaning strategic upgrades to investment properties and cash flowing properties like mobile home parks can be fully deducted. That's an instant return on investment and write-offs working together. Opportunity zones are back with version 2.0. Similar to the last go around, you can reinvest your capital gains to distressed areas and pay no tax after 10 years. This isn't just good finance, it's good legacy. Turn a stock sale or some other real estate cash liquidity event into a long-term tax-free investment. 37% tax rate locked in. This cap keeps high earners from being bumped back into the 39.6%. That's more predictability and more money reinvested instead of handing over to the government. Section 199A, the QBI, this bumps section from 20% to 23%. It may sound small, but it's an $1,100 annual tax savings for every $100,000 worth of income, especially powerful when you're operating through an LLC or a pass-through entity. State and local taxes, or the SALT cap, increase to $40,000. If you're in a high tax state, this is a game changer. $30,000 in extra tax deductions if you're under $500,000 in income. That's cash back into your control. And the last thing, excessive business loss limitation. Yes, it's now permanent, but the key is pacing your investments instead of doing one big deal. Spreading across multiple years, let's optimize your tax benefits. That's where your planning comes in. Let's be clear, this isn't just about deductions, it's all about aligning your money with a smarter, freer future. And at the Standard, we help accredited investors access cash flowing, tax advantage, professionally managed deals and this tax cycle. It's an inflection point. Use it or lose it. Join our investor circle by clicking the links below. We'll guide you through upcoming deals, tax strategies, and how to build a portfolio that works while you don't. This isn't about being lucky, it's about learning how to move like the insiders.